Hey there, everyone. Welcome back. It's been a while since I've made a video, and I thought, hey, what better day to make a video than today after a losing day? I know the markets were disappointing, and maybe you traded yesterday. It was also a disappointing day. And while I normally talk about, or I guess either on Twitter, or I send an email, or I do a video about the winning trades we take, today I thought I'd do something different. I wanted to talk about losing trades, and I wanted to talk about the reality of trading. Today's reality was I took 7 trades this morning in the New York session. All 7 trades followed my criteria. All 7 trades, though, ended up losing money, and I lost a total of 62 pips. Now, some traders might react with horror if they lost 62 pips, but I've been trading for so long that at this point, I kind of just roll with it. I use tight leverage and tight stops, so to recover from this should be fairly easy. But let's talk about, why did those trades lose money if you did everything right? And there's really one key thing: follow through, lack of follow through. I talk about follow through on my morning trade planning sessions with the group, and I want to make sure that they understand and you understand why that is so important. Follow through is a term that traders use in any markets that's describing price action that moves in the overall direction of a trend. Now, we're not talking counter trend trading. We're not talking range bound trading. We're talking about trending markets. And those are the only kind of markets that we trade. We're really looking to trade after either a breakout and looking for that trend to establish itself, or we're looking to get into a trend that's already going. So follow through on a trade is so important to your success that if you misunderstand this or don't use it, and I'll show you how I use it, it will derail all your efforts and kind of hinder you from getting to that success you want to get to. So let's take a look at 3 of the trades that I lost on, and I'll walk you through my thinking. And I'm only choosing 3 of these trades because these 3 will give you just a good idea. We don't need to go into all 7 because pretty much they're following the same template. So let's go ahead and begin with the Euro Yen. And this one this morning right here, I took a short off this yellow line, and you can see it initially dropped and then price swooped around and came back up. Now, the thing I want you to hold in mind, and then we'll get to it probably close to the end of this presentation, but there was no re-entry order on this. The pair moved up, and according to our re-entry rules, the only time I could trade this would be if price swooped back down in the overall direction of this beautiful trend. Let's go to the dollar yen. Dollar yen, something very similar, took a pullback trade right here, yellow line trade as we call it, initially dropped also, just like the EJ we saw, and then boom, went up. Now this was still in a clear directional move short, but my re-entry rules won't let me get in until sometime down in here. Now, let's go to the third trade, the AU. This one's a little bit different. This was a range breakout. It happened right before the planning session. I got short right here on the break. And then price held the break for about, I don't know, a good hour and a half, and then closed back inside the range. So this one would have had a re-entry down at 50 on a break of this low. But notice what price did. It came right back into the range and sat in there. So these 3 trades, all 3 followed criteria. All 3 had tight stops. The EJ and the dollar yen both had 10 stops. This has a 10 stop, but I got out right here once it closed right back inside this breaking line. So I only took or booked a 2 pip stop. So what does that mean going forward? Well, for one thing, I'm going to show up and trade tomorrow's session and do exactly what I did today. There's nothing to question. I followed the criteria. I followed the rules. I used a tight stop. So really, should I adjust anything? No, not really, because I trade with a very good risk management profile, and I don't need to adjust my equity. I don't adjust my equity until the week's done and I either have a big, huge day or I have a bigger than 62 pip loss day. All right. So showing up and doing the exact same thing is a key to your success as well. But let's talk about just keeping your trading in check going into the next session. Let's say you've had a losing day. You need to know what to do. Number one, always follow your trade criteria. You have to do that. If you don't have a plan, you shouldn't be trading. Use a stop. I recommend tight stops. The third thing, know how to get back into the market to recover only when you have a set of rules or a plan to follow. As I mentioned on the EJ and the dollar yen, I have recovery trading rules. They didn't kick in. So there was nothing for me to get back into the market. And looking at those charts, it was a good thing I didn't keep trying to hit that trade short or those trades short because they went against me. So watch the time of day to keep your FOMO in check. So if 1 hour into a session, you're hitting losses on all your trades and you're not really seeing follow through, meaning the market's not moving in the overall direction of the trend, remember that's what we defined it as, then hey, you're going to start to get fear of missing out. Well, if I stay here another hour, maybe the market will move. No, it's always better to cut your losses and go and come back. Lack of follow through will show itself within the first 60 to 90 minutes of the open. Use that as a guideline, as a framework to decide or help yourself decide if you should leave. Once you've determined there's no follow through, leave the charts and come back the next day. So I hope this helps you. Losing days happen to every trader, no matter if you're a really experienced old dog trader like myself or you're just new. Losing trades are part of it. In fact, the market doesn't move in a trending fashion most of the time. Most of the time we're seeing ranging markets and price action can whip around. So I, again, hope this helps you. I'm Kim Crumpus from the Price Action Traders Institute. Thanks for listening, and I'll talk with you soon.